is on the semester 1, 2020-2021. Can you see the question now?
Yes.
Yes.
All right, for your final exam, right, for financial accounting, the format is almost the same, right? Every year we have the same format for this paper, right? So let me say again that, for example, if you look at in this question, there are part A and part B. So the part A is on the multiple choice question, and part B is on a problems question, right? But it's just that because it's an online, because of the online assessment, right, you will be given the exam question, not the whole thing at one time, but you'll be given, for example, for the first 1 hour, maybe part A and question 1, question 2, something like that. Yeah, so I'm not sure about that. But once I get the information, I will share with you in the WhatsApp group. Yeah, so for your multiple choice question, it's very important for you to read the question carefully, right? And maybe you want to, for example, if you go through, for example, question number 1, you have 1, 2, 3, and 4 options, and you have to go through each one and whether is it correct or not. So you can cancel out those question answer which is not, or cancel out the option which is not the answer, right? For example, here, right, if I say that the following statements pertain to recording transaction, which of them are not true, right? So they say it's very important that you see that, okay, you want the statement which are not true. Why is it like that? Okay, so we want something which is not true, so careful with that statement. So total debit should equal to total credits, yes, right? So you have the number 1. It is possible to have multiple debits or credit to one journal entry? Is that possible? There are multiple debits or credits in one journal entry. Is that possible?
Yes.
Yes or no? Possible, right? For example, if you purchase a machine on cash and then the balance paid on account, so you will have 3 entries there. Yeah, so that is correct. Assets are always listed first in journal entries. Is that correct or wrong? Do you always have to put asset as first in your journal entries? Yes or no?
No.
No. Yeah. The more important is what is debit, what is credit. And some journals will have debits only. Is that true or right? Yes or no?
No.
No. So you know that, all right, you want the not true answer. You know that 1 and 2 are true. So it means that the answer must be 3 and 4. Right? So you go through each question carefully and you have to make sure that all the answers are taken up. It means that you go through every item in the question. All right? For example, here, you have Cantik Boutique purchased a 1-year hazard insurance policy on March 1st and recorded 8640 premium to prepaid insurance. As is June 30th June 30th year end, Cantik Boutique would record which of the following adjusting entries. All right, number 1 is that you have to see that, okay, you pay 8640, right? And that is 8640 is for 1 year, right? So how much is per month? 8640 divided by 12, it means that it is 720 per month, isn't it? But how much is expires by the end of June? How many months expires?
4.
So March, you are compute from March, April, May, June. So there are 4 months expired. So times by 4 months, so how much you get? 720 times by 4, you should get 2880. So these are the amount that you have to adjust, right? So this one we call adjusting entry. So it means that now you are going to recognize your insurance expense. All right, now you create insurance expense, is a debit entry, and credit your prepaid insurance of the same amount. So what will be your adjustment? Debit your insurance expense and credit your prepaid insurance. So the answer should be A, B, C, or D.
A.
A, right? So it should be your A. So this one I say that you have to go through the question, even though it's a multiple choice question, you still have to do the computation, right? You still have to do, for example, in this case, is journal entries, yeah? All right, I may not be able to go through all the questions here, or you would like me to go through or not, the multiple choice question? What about question number 3? As I go along lah, never mind lah, yeah. So at September 30th, Daisy adjusted account balance adjusted. So this one September 30th. So take note of the date. Yeah, so you know that September 30th could be the end of the month. September 30th, your balance is 310,000 and 960 debit in the allowance, right? Allowance for uncollectible. So this is your ADA. An analysis of DSB 30th account receivable suggests that the allowance for uncollectible should be 2% of your accounts receivable. So back that for the expense, so means that now you have to compute what is the missing value, right? So in this case, I suggest that you draw a multiple choice question, right? If it's not here, right, you may want to draw the information in the T account. For example, here you have your accounts receivable, yeah, and then you have the accounts ADA. Accounts receivable have a balance. How much is the balance? Balance brought down, and then you know that what is the balance? Closing, yeah. And similarly for ADA, you have balance. Let me put here my X file. Right, balance, ADA is a credit balance, so you have it here, balance, opening balance, and what is your closing balance, right? So what are the information given to you? So as at 30th December, you have an adjusted account balance in accounts receivable of 310,000, right? And the debit and 960 debit in the allowance for uncollected accounts. So is this an opening balance or closing balance?
Closing balance.
Closing. All right. So means that here you have a closing of 310,000. But they say that the ADA, all right, would be the balance of ADA. Allowance of the ADA should be 2% of your accounts receivable. So means that here the balance should be 0.02 times by 310,000. So it means that the closing balance for ADA is 0.02. Apa tak ni Oh, salah. 0.02 times by 310,000. Yeah, 612. And opening balance is, but ADA here, why does it say that you have a 960 debit balance? Oh yeah. So, how is that? $310 and 960 debit in the allowance for uncollectible accounts. Why is it debit balance there? Right? If I were to read like that, 960 here would be my expense. That the expense here would be plus. Does it go like that? Okay, I think so. Salah. Is that the answer?
Yes, Madam C.
Question number C, number 3. 3 is C. Oh, I only have question up to number 3 only. Right, so why? Because this one is instead, all right, balance, command X. So instead of having a credit balance, you have an opening balance on the debit side because the question says so. Right, so that's why I have a balance here And then closing balance is 2% of your closing account receivable. So that's how I have the bad debt expense of 7160. So the answer should be C. Yeah? Is that clear? So when you have this, you can just draw the T accounts and put in the information and look for the balancing figure, right? So who are the real owners of a company? A is the preference shareholders, board of directors, ordinary shareholders, or debenture holders. A, B, C, D. Who are the owners? Hello? Do you know the answer? Hello? Are you here?
Yes, madam.
Yes,
C,
madam.
the answer. I thought that I was out from the internet. Okay. In a company to whom dividend is given at a fixed rate. Anyone?
B.
In a company to whom is dividend given at a fixed rate.
B.
B is a preference shareholders, yeah, because you know that ordinary shareholders, there's no fixed dividend, and even it's not a compulsory for company to pay to ordinary shareholders. But to the preference shareholders, they have a fixed, for example, 10% preference shares. So it means that the dividend is 10%, whether the company is making profit or not, right? And then, so these are on the shares, right? Current ratio, amount of current asset. All right. So what is this? At the beginning of the year, preference dividend were 3 years in arrears. Board of directors proposed to pay 2.5 cash dividend on the ordinary shares in the current year. To achieve this, what total amount of dividend must dealers say company declare in the current year? So you have preference shares of 2,500 units, and ordinary shares is 125,000 units, right? So if I say, if the company decided that to pay 2.5 cash dividend on ordinary shares, what is the total amount of dividend? You have 125,000 times by 2.5. Is the answer 312,500? It's not there. 125,000 times by dividend 3 years in arrears in the current year is 225,000 times by 2.5. Why am I not getting the answer? Do you have the answer? Preference 3 years. Oh, I mean that they want the total amount, right? So total amount means that you have the ordinary shares is 312,500, but here you have 2%, right? 2% cumulative preference shares, so you have to pay 2,500 times by 25 ringgit per unit, then you pay 2% of that times 0.02, so you have 1,250. But still, if I have that, preference shares, what is the dividend for preference shares? Preference shares is 2,500 times by 25 times by 0.02 equals to
1,250.
1,250. Yeah. But what about your ordinary shares? Ordinary shares equals to, you have 125,000 times by 2.5. Yeah. So equals to, we want to this now, is it? RM 125,000 times 2.5 equals to 312,500. 312, 500. So total is plus 1250. It should be 313750, but the answer is not there. What will be the answer? Oh, I think that this one you have to times by 3. Is it? 1250 times by 3 plus 312500. So you want 216. It's not there also. I do not know what's the answer. Do you know the answer? Because this one is 3 years in arrears.
Madam, we multiply with 3 for the 3 years in arrears, but you not plus the amount for the current year for the preference.
Oh, so times 4, is it? Oh, current year plus. All right, understand. Plus times 4. So it should be, again, 1250 times 4 means that 3 years for the arrears plus the current year. All right, plus 312, 500. So it will be 317, 500. Right, if I were, right, if in the exam, this one is 317. If I don't have the answer, the one that just now, which one would you pick for the answer? Of course, I will still pick this one, right? That is the nearest to my answer so far. Okay, right. So why is your current ratio is 3:1 and working capital is 1080? So this one is the previous class. What is your working capital? Current asset minus your current liabilities. So you have current asset minus current liability is 1080. So what is your current asset? Right? Current asset minus current liabilities is 3:1.
C.
C, how do you do that? How do you do that?
1,080,082 divided by 4. Then multiply by 3.
Times 3. Yeah, that's good. Right? Because when your 3:1 is total is 4. So you have a working capital 1080. What is the formula for your working capital? Current asset minus current liability, isn't it?
Yes, madam.
So it means that if you do it again, 1080, right, times 3/4, you should get 810, right? And then your current liability is 270. Is that the answer? Because now current asset, I thought like working capital is your current asset minus your current liability. So 3:1. Right, it should be 810. Okay, all right. So so your multiple choice question will have now I think that it should be about 15 questions. Yeah, 15 questions, 15 marks each. So do a lot of exercises on these multiple choice questions so that you get familiar with the question. All right, if you do your past question, 3 past question, you already have done 45 questions. Right, so do a lot of exercises because it will help you to understand the question better. Right, I just want to go through, it's already 2:24. I will go through the first question. All right, let's look at what kind of question that we have for your final exam. All right, for part B is the problem question. So question number 1, you always know most of the time you'll be given the unadjusted trial balance, right? Given an unadjusted trial balance, and then, right, you're given the transactions. All right, so these are to be adjusted as at year end. It means that you have to go through all these transactions, A, B, C, D, right, E, F, and then what you have to do is to prepare the profit and loss statement, changes in equity, and the financial position, right? Sometimes the question also requires you to do the journal entries first. So how are you going to do this question? What would be your strategy then? Anyone? Yeah, I tried to answer this. Right. So let's try to, okay, let's do this together. All right, so this mark is 25 marks. So what you have to do is that you're going to prepare the question asks you to prepare for the financial statement. So there are 3 financial statements that you have to prepare. One is the profit and loss account. The second one is your retained earnings. And the third one is your financial position. So what I'm suggesting you to do now is that, right, there are many ways for you to do this, right? But I suggest that you can start with your unadjusted trial balance. Put all the information in the unadjusted trial balance into your financial statements, right? So means that you must know that what should be in your financial statements. Okay. All right. So if you have your PPE, you know that it's going to be into your financial position. All these are your financial position. But then patent, remember, is an intangible asset. Sales revenue goes into your profit and loss account, sales return, cost of sales, right? And then you have other income. Inventory is your asset, trade receivable in your financial position. ADA will be part of your receivable, is a contra asset. Unearned rented revenue is a liability. And then you have your, let me see, where is it? So why I put it into that is because I want to show you how to do this question faster. Where is it? Okay. Let me see if I can copy paste the information from the Google. Right. So let me. Is this the question? Question 1. Right. So given this information, right, I want to show you how to prepare to do this question. Again, you are given the unadjusted trial balance. What you do is now you have to prepare the financial statement. So you know the financial statements are your profit and loss, retained earnings or statement of your equity, and then statement of your financial position. So let's do this quickly. So let's see how much time do we need to do this question. All right, let me just do it here. All right. So I will put in all this information here. Command V. Remember that I copied just now? So of course, you don't have this in your final exam. You have to do it using your pen and pencil, but I will just show you how it's been done. Okay. So first is that, remember that you have to prepare your statement of profit and loss. All right. This one put in for the year ended. What is the period? The period is 30th of June 2020, right? So this is your SOPR. What is under your SOPR? You must have your income, and your expenses. So you put in the framework for your profit and loss account, right? Maybe you may need to add in some lines later, all right, it's still okay. So expenses, from your revenue minus expenses, you have your profit, right? So just put it there. And then sometimes you have your tax expense, and then you have profit after tax. Yeah. And then what you need to do is your statement of retained earnings or statement of your equity, right? For the year ended 30th of June 2020 also, right? So this is the second statement that you have to prepare. So what will appear in your SOR? Statement of retained earning, you're going to have your RE brought down, opening balance for your retained earnings, and then you will have your if you have your dividend, right? If you have your profit or loss, yeah, depends whether you have a profit or loss, which is actually from your SOPL, statement of profit and loss account. Then you have your SOF, right? Statement of financial position. So this is your for the year as at 30th June 2020, right? So what is under here? You have your assets, and then you want to put in your liabilities, and then your owner's equity, right? So once you have all these, right, as your frame, right, then you plug in the information from this one is your unadjusted prior balance, right? So because you have not done all the adjustment yet, so you just put in all the information first. So for example, here I have PPE, prepayment, and patent. I know these are my asset. I will plug in this information into my asset here, right? I will just plug in the information, right? And then I have my sales revenue and sales return, cost of sales. For month C, I will put this part. Where will this appear? Sales revenue, sales return, and cost of sales. Where would this appear? In your profit and loss, or in your SOPL, or in your SOF, financial position?
SOPL.
SOPL. So you just plug in that information, right? So I'm going to have it like this, right? But this one, remember that sales return is deducted from your sales, and then you have the net sales, and then minus your COGS, right? What else you have? Other income, right? You have this one is supposed to see. I have other income. Are you following? Am I too fast? Okay, now put in what else? You have under income done, then you have your inventory. So what are these? Inventory, trade receivable, allowance. Where would that appear? It would be under my asset as well, right? It's just that for my allowance, I'm going to put a bracket here. So it means that it's a negative. So I just put a negative there. What else? I have unearned rental. So this is my liability, unearned revenue. So that is my liability. What else? I have admin expense and other operating expense. For month C, that will be my expenses. I will put it here. All right, but tax expense, I will put it under separate one. I put it here. Right, so and then trade payables, other payables, long-term loan is my liability. So I put that information in my liabilities. I'll put in here. Okay, and then I have my share capital. Command C. Share capital is here. And then I have my retained earnings. I put it where it will appear. Retained earnings will be in your sort, right? Your retained earnings as at 125. And finance cost is part of my before here, right? I just put it here. Okay. So now it means that you have transferred all this information into the respective statement. So at least you are already 50% there, right? If you look at all this, adjusted income is put into the respective statements of profit and loss, SAW and SOFP. You do not have to compute yet. Just plug in the information into the respective columns. So what you do now is, now you look into the adjustment. So what are the adjustments that are required, right? So let's look again. What are the adjustments? Then you go through A, B, C, D, E, and F, all right? For example here, the inventory has a net realizable value of 130,000. So what does it mean here? So it means that in your unadjusted trial balance, your inventory is 144,000. Right? So if your inventory has 144,000, this one is the unadjusted, but now it says that there's 130,000. Is that a reduction or an increase in your NRV of your inventory? Right? Reduction. So then when there's a reduction in your inventory, what would be your journal entries? So you're going to reduce your inventory by how much just now? From 144 to 130 is a 14,000, right? So what would be the journal entries? So let's put it here as debit. What do you debit? And I know that you're going to, okay, don't put it like that, right? Let's put it here. Debit and credit. So you know that you're going to credit your inventory. What is another entry? You're going to reduce your
revaluation value.
Sorry?
Revaluation value.
Is it revaluation? I'm not sure. Let me check the answer. What do they do? The journal entries debit cost of goods sold, right? They debit the cost of goods sold, 14,000. So remember that this one is a perpetual. How do you know it's perpetual? When you see in your cost of in your statement, you have in your trial balance, when you see there's a cost of sales, then you know it's a perpetual inventory. So when there's a perpetual inventory, then any reduction, all right, in the inventory, you're going to debit your COGS, right? So I'm going to copy this. So the first one is that you're going to debit your COGS and credit your inventory. So if I will have, and then I will just copy lah. Banyaknya. A lot ya. Mana inventory? Okay. I'll put like that. Aduh. Right? So you have your COGS. 14,000. 14,000. Okay. The next one is, what's the next entry? The next entry is say that the unearned rental revenue recorded 3 months rent. The unearned rental revenue recorded 3 months rent revenue collected in advance on 1st May 2020. So it means that, all right, on 1st May 2020, you have unearned rental revenue. So how much the unearned rental revenue is 7,200, right? But the unearned rental revenue here is actually your liability, right? But because now you have earned the revenue, so it means that you make payment of your rental or you receive your rental revenue in advance, right? So that's what it is here. All right, unearned rental revenue. So what you do is that you are going to recognize your, so it means that 1st of May, so you have 1st of May and then you have May and June. So the 2 months period now is now being recognized. So how much are you going to recognize your rental revenue now? 2 months, 2/3. So the here means that the unearned revenue here is 7,200 is for 3 months period. So you're going to recognize revenue of 2 months. So what you do is that you're going to have your unearned, you're going to reduce your, which is your liability, all right? And we are going to recognize your rental revenue. It's a honest equity. So how much is it? It's actually 7,200 times by 2/3, right? So you have plus 7,200 times by 2/3. Why 2/3? Because you are recognizing 2 months, which is the May and June income, right? The same goes into your rental revenue, right? So this is the same, right? And then let's delete this first. The third is it was determined that 2050 customer balance is to be written off at year end. A check for 900 is received from a customer whose account written off in the previous accounting year. The company estimate 10% of outstanding, what is this? Outstanding trade receivable balance to be uncollectible in the current year. All right. So if you think that this information is, you do not know how to do it, for example, in my case, I would find that this part C is challenging, right? So I will leave this information first, right? I will do the next one, D, right? You can do that, but of course, later you have to come back to this question, right? Because this one, you have to do your accounts receivable and see how you're going. In this case, you are written off. Yeah, it was determined that 2050 customer balance is to be written off at year end. So that is one information. And then you have another information says that a check of 900 is received from a customer whose account was written off. So this one is a recovery, right? It's not D, it's a recovery of your bad debt. So how are you going to put on the recovery of bad debts? And the third information here is that the company estimate 10% of outstanding trade receivable balance to be uncollectible in the current year. So these are the three things that you need to do for this part C only. All right. So the first one is that how are you going to record write-off? Right. And remember that this is a perpetual. So how are you going to do a write-off? It says that when there is a write-off, in this case, how much is the write-off? 2050. What you do is that you're going to debit AFDD and credit your accounts receivable. So that is very straightforward, right? You have AFDD, or sometimes you call it as ADA, right? So either way, right? And then you credit your accounts receivable. How much is the amount that you write off? So when you write off, you credit directly to the accounts receivable because it's confirmed that you are writing it off. But for the second one, all right, when you have a recovery of your bad debts, right? So what you do is that first you have to create first the accounts receivable, all right? Then only you cut, you set it off, right? So there are two double entries for this. The first one is that you're going to create your account receivable of 900, right? That is the amount that is recovery. And then you put AFDD here, all right, under ADA. So it's a credit of 900. So that's the first adjustment. The second adjustment, remember that when you receive from your account receivable, you're going to debit your cash of 900. But because now the account receivable, just now you create account receivable, but now they come back. Why you have to create? Because remember you have written off last time. Last time you have credited, so now you have to debit first, and then only you credit your account receivable of the same amount, 900, right? So the net amount here, you debit and now you credit, so there's no more account receivable. Why you have to debit first when there's a recovery? Because the amount is not there, right? So you have to recreate your account receivable, all right? Then credit your ADA and then debit your cash because you receive cash from your customer. and then you credit your account receivable. Means that you are actually clear off 900 here, debit, and then you credit another. So there's no more amount due from the account receivable, right? So that would be, and finally, all right, it says that the company estimate 10% of outstanding trade receivable balance to be uncollectible in the current year. So here you have to see that you have to look at what is your receivable balance. Whatever is your receivable balance, that would be your estimates, all right? Or you have to put that into your ADA, all right? That would be your closing balance for your ADA. So it means that what you do here is that you're going to look at your bad debt expense. So for doing that, you must know what is your closing balance for your account receivable, right? So you know that the account receivable balance start with 57,000, right? It's a debit balance, so it's a balance of 57,000. And during the year, all right, you look at here, there's nothing to do with your account receivable, but of course you have these, right? So you credit your account receivable 2050, and then you debit 900 here, and then you credit 900 here. So then you will know that what would be your balance. So, but here it's not shown. I will put it here as, why is it not there? I think it should be 2050 here, right? 2050. And then another one, you have 900, and then you have 900 here. Why you 900, right? So the balance will be 54950, right? So if the balance is 54940, right, 10% of that is 5495, right? This because the law says that the net is the ADA will be 10%. So this 5495 for my X, right? 5495 here would be the closing balance for your AFDD, right? And AFDD, you are given the opening balance of AFDD. How much is the opening balance? 6,400. So the 6,000 is the opening balance. But remember that you do have your this transaction, right? So what is your AFDD? You have 2050 debit here. So I think that you have to put it 2050, right? And then what else? AFDD 2050, and then you have a credit of 900, right? And then bad debt expense. Okay, you know that you have a closing here, 5495. So this is the balancing figure. So bad debt expense will go into your SOF SOPL, SO profit and loss SOPL. Yeah, so don't forget you have this 245 to be put into your SOPL. All right. Are you okay?
Okay, madam.
Yeah, okay. So that's because of that, you're going to have this bad debt expense and your AFDD. So you're going to debit your 245 and 245. Okay, bad debt expense and your FADD. Where do you get that information? From your ADA. Yeah, or your AFDD, you have 245, debit your bad debt expense, credit your ADA. So this amount will later go into your profit and loss statement. Right? And finally, you have, where is it? All right, this is on the property, plant, and equipment. Right? So you have freehold land, 0 accumulated depreciation. Plant and machinery accumulated is 31,140. Building, you have accumulated of 120,000. Additional information, now you have your revaluation. So when you have a revaluation, and in this case, revalued to 330,000. So initially it was 250,000. So how much is the revaluation? 80,000. So when you revalue upwards, means that you're going to debit your land and credit your asset revaluation reserve, right? So what you do is that you're going to have a debit your land and credit your ARR. Right, land you're going to credit and increase the value by 80,000 and ARR also credit of 80,000. So far so good? Okay, then you have the plant and machinery to be depreciated at 20% per annum on a diminishing balance method. All right, so this one, how are you going to do diminishing balance method? So diminishing balance method, it means that you have to look at the net book value. Right, so what is the net book value for plant and machinery? So net book value is the 86,500 minus 31,140. So that would be net book value based on the net book value times by 20%. Right, so how you going to do that? Where's your depreciation? Ada tak kira di sini. Right, so what you do is that your depreciation on your, what is that? Plant and machinery. You're going to credit your accumulated depreciation for your plant and machinery. So how are you going to compute that? Cost of the asset is 86,500 minus accumulated depreciation of 31,140. 31,140. You can have a bracket there so that you don't, right? So whatever we get from there, you times by 20%. Okay, so if you want to compute, for example, here plus 86,500 minus 31,140 times by 0.2%. Do I get the same answer? 11,072. Yes, the answer is 11,072. So I debit my plant and machinery. I will also credit my accumulated depreciation. Right, this one done. Right, I do not want to delete this. Command X, I will just put it here next to it. So for my easy reference, okay. Okay, the next one is the building is depreciated at 5% on a straight line basis. So now you have the building which is depreciated at 5%. So when you say that it's a straight line basis, it means that you have to take from the cost, 800,000. So now you have depreciation for the building, right? Another depreciation for the building and accumulated depreciation for the building. How much is the cost? The cost is 800,000 times by 5%, right? So how much is that? Plus 800,000 times by 0.05. Command C, that will be debit your depreciation, credit your accumulated depreciation for your building. All right, and the patent was acquired on 1st July and provide legal life of over 30 years. However, it's expected to benefit for only 15 years. So you have a patent where you have to provide, what do you have to provide for the patent? What do you call it? Patent. If a fixed asset or current, in this case, your PPE, we call it as a depreciation. Patent is an intangible asset. So you're going to provide amortization, right? So it's similar to depreciation, but the term is amortization on your patent, right? So similarly, you have the accumulated amortization for your patent. But how are you going to compute the amortization for the patent? How much is the cost of the patent? Patent here you have 150,000, right? And then it will be used for how many years? For 15 years. So you have to use this, all right? They're expected to benefit the company for 15 years. So 150 divide by 150,000 divide by 15 years. So you have 10,000 per year amortization for your patent, all right? 10,000. What is the answer? Yeah, it's 10,000. And finally, right, you have a declared a 3.5 dividend which is payable on July 10. So 3.5% dividend on your ordinary share. So when you have declared your dividend, but you only pay that on July 10, 2020, that is going to be a dividend payable. So the entry for this would be debit your dividend, but you're going to pay dividend later, so you credit your dividend payable. So how much is the dividend? Is 3.5% of your ordinary shares. Where is your ordinary shares? You have 830,000 ordinary shares. So what you have is 180,000, 180 times by 3.5%. Right? So what you have is that plus 800,000, 830,000 times by 0.035. Common C, common P. Right? 29,050. So that would be the adjustment, right, based on the notes given to you. So once you have this, and remember that you already have prepared all this, so you plug in this information into the respective cost of goods sold, right? So these journal entries, all right, you plug into the financial statements, so not cost of goods sold, yeah? So the first one is you debit your COGS. So COGS will be part of your, so you're going to add more of your, you add another, what's this? Cost of goods sold. So what you have is minus 14,000. You add to your cost of goods sold. Why you minus? Because cost of goods sold is a negative, it's an expense, so that's why you minus. Right? And then what else? You credit your inventory. So when you credit your inventory, plus or minus, you just put here minus 14,000. Right? Why you minus? Because it's a credit entry, means that it reduces your inventory. The next one is unearned rental revenue. Debit is a liability, means that you are going to minus 4,400, right? But you're going to recognize your rental revenue. So where's your income? Other income, you have rental, or maybe you want to put in here other income, you plus another 4,800, right? So that is the additional or the adjustment on your income. In this case, is your rental income. The next one is your AFDD and account receivable. So where is your AFDD? AFDD is part of your soft AADD. So means that if it's a debit, means that you are going to plus 2050, but your account receivable is a credit, means that you minus your accounts receivable. Minus 2050. Right? Why is minus? Because here account receivable is credit, so it means that credit is a reduction in your accounts, in your trade receivable. And then you have account receivable debit of 900. You want to plug in 900 there, and account here is minus 900 under your ADD. All right, and then you have cash of 900 plus 900. So I will just plug in the information from my journal entries into the respective financial statements. Yeah, so later I will just work out on the changes, right? And then I have, what else? 900, 900, cash and account receivable, I have another 900, minus 900, right? So there are two 900 there. Insert, right? Okay, we have done that, account receivable. So now we have BDE. So BDE is not in your here, right? So we can put in your BDE of 245, sorry. Now you have 245. This is from the adjustment. What else you have? Credit AFDD or your ADA. So you add another 245, minus 245, yeah? Credit your ADA. If you credit your ADA, yeah, correct. So you minus, and then you have land of 80,000. Land, where is your land? In land, you have under PPE plus 800,000. And then you have ARR. ARR will be here. Right? So 80,000. 80,000. Not, is it 80,000? It's not 800, yeah, it's 80,000. Okay, 80,000 here and ARR. Next is your depreciation for your plant and machinery. So let's put your depreciation for plant and expenditure, and then you have depreciation for your building, and you also have amortization for your patent, right? So I will have to move this to the bottom a bit.
It's 3 o'clock.
Right? So how much is your depreciation? Depreciation here is 111,072, and then 10,000. And then the next is amortization is 10,000. Building is 40,000. Command S, command V here is 40,000. Now it's 3 o'clock. All right, don't forget to put in those, the accumulated depreciation. Where is it? So you had the PPE, accumulated depreciation. You just add on there minus, what is that? Minus 40,000. Minus, because it's a credit, yeah, 10,000 minus 29,050. Oh no, pattern would appear as here. Pattern minus 29,050. Right, because patent and PPE is shown separately because one is the PPE, the other one is the intangible asset. And dividend, where would be dividend be? Dividend would be in your, here dividend, how much is the dividend? You have dividend of 29,050. And then you also have your dividend payable, and on to your liabilities, you have dividend payable. Right? How much is the dividend payable? Is 29,050. Okay? So now you have that. Okay, let's do this. All right. So what you have to do now is that, all right, this one is the adjust. This one is from the unadjusted. Right? And this one is your adjustment. So what you want to do is that you want to get the total, right? The new balance of all these. So what you do is that you just get the new balance. For sales revenue, there's no change, right? Similarly for sales return, but you have all these changes, right? So let me do this like this. Okay, let me do it like that. Okay, so what happened is that now you see that you have the adjusted figure for your sales revenue, no change. Sales return, no change. So means that if you have done this sales return, at least you already have one tick and one tick for that, because that is the answer for that, because there's no changes. But your cost of sales, you are going to have two ticks there. Right here is, for example, I show you how the marking is being done. Right, not that one. I don't want that. I want it the red one. Right, so how is it done is that, so here there's no change, so there's one tick there, no change, one tick. But when there are changes, right, there are two items here, so there will be two ticks there. But for your other income, there will be two ticks. Why? Because the original one and the adjusted figure, right? The admin, there's no change, one here, but here you have one new item, right? And then compute what is, sorry, this one should be up, yeah? Command X, this one is your depreciation, command V. So your depreciation, one tick, and then what is your profit? Command X, I put it here. Your profit is, how much is your profit? Right, so this one is your sales, other income. So total of here, income, right, both, and then total of your expenses here, minus some of this, right? So profit would be total of your income minus your expenses. Right, 187, but then you also have your tax expense, add on that one, and profit after tax, you just add these two items, and then you have the ARR is an income, and then you add this one. Right, so this one is your sole key. Okay, so what do you call this? 244,143. So what you have here, 244,143, this figure will go into your SAW, right? So where is your SAW? You're going to put it here, plus of this figure, right? So you have a new balance for your SAW, which is 340,493. So this figure will go into your retained earnings here. Right, so this figure is the new one plus your 340,493. I know that this one, right? And then now for the asset, updated figure for your asset, you just compute the new figure, right? So if there is any changes, okay, so what is the total asset here? Let me see whether we have a balance there, right? And then your liability is the total of the new. Let me see here, right? And then you plug in the information, copy the information. So this is your total liabilities. Put it here. Right, and your so this one is your, so what is your total plus this one plus your liabilities is 1,401,543, which is not the same as your, right? So now you don't have the same answer, right? So but do not worry, because why? Because it's not the correct answer that you're looking at. You're looking at for the workings, because you are given marks for your workings. So if you happen to get like me, all right, it's not the same answer, you may want to look for the differences. All right, you want to look for the differences. How much is the difference? All right, maybe the amount somewhere that you need to put in, right? But, right, remember, in your exam, you do not want to spend time on finding the errors, right? Because you don't have time for that. If you have time, then only you go back to the same question and look back where you could have done wrong, right? So, but in this case, you proceed to the next. And because why? By having this, you already have about 70 or 80% of the answer for the question. So you do not want to spend more time on this. All right. So if you look at the answer here, right, your total comprehensive income is 244,143. So my answer is 244,143. So it's the same answer. Yeah, what about your retained earnings? Retained earnings is 1,170,593. Right, so they put a surplus here also, yeah. Oh, they put it separately. They put profit for the year. See, they show it separately, profit for the year. And then you have the OCI, the surplus from ARR, and then dividend paid. In my case, I combine both. Yeah, I combine both. So, but if you want to do it correctly, I'm not sure. Yeah, right, it's the same. Yeah, so if I were to have your SAW, all right, I will have your ARR here. Right, so command X, command V. So my profit will only be, how much the profit just now? 164,143. And then I put in my ARR of 80,000. Right, so 345.93 for your retained earnings. Is it the same? Not the same. What's my balance? 955. I thought that I have, kenapa I punya balance sikit je? I have share capital, is it? It's okay, 830. How is that represented in the financial position? You have, they just put total, what is your equity, ordinary share, retained earnings, and revaluation at 1170593. All right, 1170593. My answer is, where's my answer? 110,593. So I got the right answer here. It means that my asset is wrong. My liabilities is 230,950 is the same. My liabilities is correct. So it means that it has to be my, what is wrong is my, here is wrong. Yeah. So what went wrong? So you don't have to spend so much time on this. Cash, prepayment, trade receivable, allowance. I'm not sure where I may have forgotten something, right? What is missing under asset? It should be 1401543. 1401543. 1401543. So my asset is not correct. So what went wrong? My asset is, I have non-current asset, patent, minus 10,000. Property 1014. I want to check on my property. 1014. So my property is not the same. What went wrong? Depreciation is 11,072. Oh, okay, I got it. My depreciation should be 11,072 and 14,000. 11,072, right? 10148, and my patent has 129,050. Still not right. At least my asset is 1018. 1014 to 88. 1014.
Madam,
Yes.
you not add accumulated depreciation.
Accumulated depreciation for? Oh, the opening balance. Is it?
Yes.
Oh, thank you, dear. Thank you, dear. So the accumulated depreciation opening balance. Thank you, dear. So we should have, what is that? 31140 for PPE. So I will put in minus 31140 there. And then for the patent, building 120. So I put in again minus 12,000. Betul ke? Makin besar je jadi. What about your patent? There's opening patent. The patent was acquired in July 2019. So means that now it's 2020. You already have a balance. You already have 29. That is the accumulated figure minus 29,050. Is it? Oh, still not getting it. Okay, if I were to have my, let me have this, for example, let me show you Command X, Command V. Let me have my accumulated depreciation for my PPE. So the opening was, but this one is inclusive already. 9,853.60.
Madam,
Yes.
accumulated depreciation for amortization 10,000.
Berapa 10,000 lah? Why kira? Hold on. Oh, 10,000. 29 tadi apa? Oh, dividend. Astaghfirullahaladzim. Okay, mana dia? Amortization, patent here, minus 10,000 for the first year, and the current year another 10,000. Lagi? Apa lagi? What went wrong? Okay. So again, alright, it's okay if you have enough time. This one is more than enough, right? But if you have more time, you can check where you went wrong, but it will just create more stress. So just leave it as it is in your examination because time is a crucial. So you move forward to the next question. So leave it as it is, right? If I were to have just kat mana nak tengok ni ya? My inventory 130, inventory dah. Inventory 130 betul. Patent pun 130 Patent. Oh, dia tolak sekali je patent. 10,000 only. So the previous year means that, oh, that's only 1 year. 10,000 means that because you acquired in 2019, so depreciation is only for one year. Right? What else? Cash 53,400, prepayment 14,400. Do I get the same answer? Cash, yes, prepayment is 14,400, correct. Patent, inventory, okay. Trade receivable, what about my trade? Where's my trade receivable? 54940 is the same. Allowance 5495. Where's my allowance? Correct. Nah, kat mana lagi salah ni? PPE. PPE, it should be 1014288. 985 plus 80,000. What is that? Okay, this is the revaluation and then this is the depreciation. Why did I get wrong? Dia tak payahlah masukkan you punya opening sebab you don't have to include your opening balance of your accumulated because it's already there. 98.5 ni is already the net book value of your PPE. So you don't have to include your opening balance for your accumulated depreciation. Right? So now, tiba-tiba je sama dah. Right? So you do not have to include your accumulated depreciation because why? Here is already the cost minus your accumulated depreciation. That's why they don't have this line. Right? So you only have this in your trial balance. So you start with that plus the revaluation of your land and then this one is the accumulated depreciation. So then you get the same answer from your asset equals to liabilities plus honest equity. All right, look at the time that we made. We took about 1.5 hours, right, just to do question number 1. Right? So in your exam, you don't have that much time. You only have about 30 minutes. For example, if it's 25 marks, so it means that you only have 25 minutes to do the question. Right? So I suggest that, all right, if you do, right, you just do the plug in the information from the unadjusted trial balance, put into your financial statements and do the journal entries and plug in information into your journal entries. All right? If you do not have time to do the adjusted figure for all your FFP, but you show me the plus minus here, that is more than enough. Right? It's more than enough. But of course, you need the information, how much is your profit for the year, because that amount, it has to go to your SOR. And this amount goes into your statement of financial position. All right. Are you okay?
Yes.
Yeah. So you have to do a lot of exercise on this. Yeah, do a lot. So for example, if you have many past years question, make sure that you have done all the past years question. So you have 4 sets, means that you do the same thing 4 sets. Or if you have done 4 sets, then you really do if you don't have any other question, right? Because when you do a lot of exercises, it will help you to expedite. You can do it faster because you already know the transaction. You already know. You don't have to think much about what is the double entries for the transactions. You already know. Looking at depreciation, you know already how to compute and what is the double entries for the depreciation. All right, so I will stop here, all right, for question number 1. And in the next class, I will discuss on question number 2. Right, this one information is on question number 2 is a statement of cash flow. Hey, we have done this, right? We have done this Broadfield Senja Broadhide. Done. Question number 3 is on the shares, right? Liability and shares. So what you are required to do, journal entries for the shares and liabilities and financial position and the difference between right issue and bonus issue. So we'll only look into this question in the next class, question number 3. Right, if you have time, you can join my class again, inshallah, next class, which is on Thursday. So for today, that's all. Right, do you have any other question? All right, I want you, hold on, I stop the recording first.